This episode is a live workshop that my friend Sieva Kozinsky and I hosted on the value of a business and how to make your business more valuable. You're going to tune in here and you're going to listen to us talk about what businesses we pick, why we like certain industries, how we delegate, how we build teams, how we hire, how we fire, and really the three skills, sales, hiring, and delegation, that we think are key to a business owner building an asset that can make them money while they sleep. I hope you enjoy this. It was sponsored by nickhuber.com, which is my business brokerage. We buy and sell companies. Go to nickhuber.com today and get on our list. If you want to see our listings or if you want to sell your company, we can get you a large audience and we can get you the best price if you go to nickhuber.com. What does success look like? And I think you had a interaction pretty early in your life with a mentor of yours that kind of helped you clarify that of, hey, what are we all doing here? What's our goal?
Yeah. Back when I was in college and unaware of the entrepreneurial or startup world, I took a class, and very fortunately by luck, because the class was only 13 people and he usually wouldn't accept most people. You really had to go and kind of pitch him your story and say why you deserve to be in his class. The gentleman's name was Paul Orfala. He started a business called Kinko's that he ran for his whole life. And then he sold to FedEx for $2.5 billion of cash. So this billionaire would drive down to our college campus once a week and he would teach this class. And it was really an incredible class, an incredible opportunity to learn from an entrepreneur like that. But the main two things that he taught me and that really stuck with me is, one, you need to find a way to make money while you sleep. Up to that point, I thought that the best jobs, the best careers you could have were being a doctor, being an engineer, or being a lawyer. And he was really the first person to tell me, hey, those jobs require you to do work to get paid. The day you stop doing work, you stop getting paid. So he really ingrained this idea of making money while you sleep. And the second thing that he taught me, which I thought was stunning at the time, because I just assumed all entrepreneurs work all the time, all professionals work all the time. I saw that with both my parents. They never took vacations. Paul said, as a matter of principle and as a rule, every year that he ran his business, he took a 3-week consecutive vacation. And for him, that really transformed his business. And we'll talk a little bit more about what that means later on. Nick, I want to flip it back to you, man. You've been through a few different businesses now. You've been in business for a long time. What have you learned as some of your key tools for going on a business journey?
I think it's a process. People think, oh, I need to, as soon as my first day in entrepreneurship, I need to be a visionary. I need to be a strategist. I need to be making high level decisions. And we have this like visionary complex early on where, hey, we don't want to do any work. We're not going to roll up our sleeves and do any work. We're just going to, tell everybody else what to do. And that's not at all what it was. I think at the beginning, you need three things. You need three main tools. The first one being capital or cash flow. And as a beginning entrepreneur, I didn't have that. I know you didn't have that. Most people didn't. And I'm talking about personal cash flow. You need enough money coming in every month that you don't need to stress about anything. When you have that, you're doing business on easy mode. You need a network. You need to know people that you can hire, and you need to know people that that can invest with you, and you need to know people that you can get as customers. And then the last one, the most important one, is that you need operational chops. You need to actually know how to run a company. You need to know how to manage, hire, and delegate. And we're going to spend the whole second half of this talk on delegation. But yeah, early on, you have none of those things. You don't have any capital. You don't have a network. You don't have any operational chops. So the first business for me was about building those things. And once I had those tools, I could think tactically about, hey, what makes a good business? What makes a bad business? And how can I get in and invest more in good businesses?
So I think it'd probably be good at this point to talk about, what does value look like, really? Because that's our destination, right, Nick? Is if we're starting a business today, we want to see a map that's going to create the most value. And believe it or not, different businesses have different values. I had no idea when I started my first company. When I started my first business, I just assumed every business is a business and I'm going to use
$1 worth a dollar.
bills.
$1 of profit's worth $1 of profit.
That's right. Exactly. But now that I've been buying businesses, now that I've been on the investor side of things, I have an incredible sense for what is a low value business and what's a high value business. So what I've done here is I've put up two different types of companies here, right? on your left-hand side is an apartment building. It's the simplest form of business, perhaps. You buy
In a great location in a major city, this is one of the most valuable businesses in the world. 20 times earnings, even
That's
lower,
right.
literally 25, 30 times earnings at a 3 cap apartment building, which is what they were trading for in downtown US major metros.
That's right. I live here in Los Angeles. If you own a big, beautiful apartment building like this, you're going to get paid a lot of money for it, right? And the reason is because, like Nick said, you have that location. It's really your moat, right? You have the location, you have people around you, you have a strong economy, you have great weather. So you don't need to worry about much. Your business, your customers are predictable for you and they come back to you, and at the end of the day, you have that real estate that you own. So for $1 million of cash flow, you could sell that business for $20 million. If you have $1 million of NOI, you can sell that business for 20, maybe $30 million at exit. Now, let's take a look at the same size plumbing company, right? Joe's Plumbing here in Los Angeles. Let's say it does $1 million of earnings. For a regular plumbing business, it can trade at 2.5 or 3 times earnings. So we're talking a best case scenario, $3 million. Now, as an entrepreneur, I know many of you are current entrepreneurs. Some of you are going to be future entrepreneurs. Some of you are looking to buy a business. You really want to ask yourself, why is there such a big delta between different types of businesses? Why is there a $17 million difference between a small plumbing business?
Yeah,
and
they
an
both make
apartment
$1
building?
million a year. They both make the owner the same amount of money.
Yeah, exactly. Exactly. And it really comes down to a few different elements. And those are the elements that we want to study today and that we want to plan for today. One is, if you have a small plumbing business where you're the owner and you're running everything day to day, you're working on the job site, you're helping your guys out, you have almost no competitive moat, right? Any old John can come in and start fixing plumbing just like you. The second thing is, you don't have a lot of value to the buyer. A buyer like myself, I want to get a low risk return on my dollars invested. So if I buy your business, I want a high probability of making money, of making a lot of money back. Now, if you, the owner, are running that business day to day, and I buy the business and you retire, how am I going to get my value back, right? Who's going to help me manage my guys? Who's going to help me do the work? Who's going to help me price things? I'll probably lose most of my investment. And that's why I showed this third example here, this second plumbing example on the right-hand side, because you can have the same size plumbing business, $1 million of cash flow per year, just like the other two examples, that trades for 5 times or 6 times earning. So at exit value, you could make $6 million, right? That's double. That's double or more than what our first example in plumbing showed us. And the big difference between these two is the one on the right-hand side is a business that has a brand that people recognize. It has returning customers that call them, right? Referrals, or they've done a really good job, so they don't need to advertise to find new customers. And they have a management team. The owner can go on vacation for a few weeks at a time with his family. He doesn't have to be in the office at all times. And that's really our goal. It's not that you need to Nick's example earlier about the restaurant business, Texas Roadhouse, there are great examples of any type of business. And our goal here today is to show you a map of how you can get there. And it's really all about like having a map. It's all about having your heroes. And you can probably jump to the next slide.
Yeah, I think before we do, I think you got to think about everybody in this world is looking for a return on 2 things: risk, the risk that I'm going to take, and headache. Okay. It's like return on invested capital as far as risk. What are the odds it's going to go away? You got an apartment complex in LA where you can see it, you can touch it, you can feel it. The rents have been solid for 20 years straight. The odds that the revenue and profit is going to go away are very low. Okay. If I'm taking over a one-man shop plumbing company with no management team where he's scrounging around for business from his network, the odds of me losing my investment are high. So I need a higher return to make up for it. And then there's the return on headache. A management company can be hired to run this building in LA. Zero stress from me. Passively, I can collect this money and get it from me. I buy a plumbing company where I got to go in and build a management team. I need to get paid for that. I need return on that headache. So, I mean, that's how investors think about this stuff. We need to think about this stuff like investors. All right, let's go to the next slide.
That's right. Warren Buffett has this quote where he says, the day I became an investor, I became a better business owner. And the day I became a business owner, I became a better investor. So for
Hmm.
those of you that are stuck in your mindset of just thinking about your business and running your business, our goal is to help you pull yourself out of it and really think as an investor, really think from the value side. So here on the left-hand side, we have a picture of young Arnold Schwarzenegger, teenage Schwarzenegger before he bulked up and was the governor of California, as many of you know. Um, and on the right is a gentleman named Kurt Marnell. He was Mr. Austria, bodybuilder, famous bodybuilder in Austria. And when Arnold was a teenager, he didn't have much direction. He didn't really know what he wanted to do. He wasn't very good at school. And one day he was reading a magazine and he saw a picture of this guy, Kurt. And he thought to himself, man, this guy looks like a superhero, right? He looks like Superman and he's Austrian. And I want to look like this guy. I want to be a Superman. How can I chart my path to be this person? And by seeing Kurt Marnell and by having a North Star that he could navigate towards, Arnold, for the first time in his life, had clear direction and could pursue his goal of becoming a world famous bodybuilder. And that's exactly what he did. And that's really your goal as well as a business owner, is to find your hero, find your North Star, find your destination to know where you're going. And I can tell you a quick story. So I've started two businesses, right? The first business was an education company that I started in college. And it was one of those situations where I just started working on it. I did no research. As you know, I was just trying to pay my bills. And we grew that business to generate millions of revenue per year. That's a really good business in most cases, but it was generating very little profit. And I had no sense of how do I really turn this business into something that's valuable. A few years later, I started my clinical trial business. And at that point, I was later in my life and I knew how to do research. I knew how to identify a good business. So I was out there for about 6 months before I started anything at all. I was talking to people, I was researching, I was reading, I was talking to business owners to really determine, if I'm going to put in a lot of effort into a company, where do I want to put in that effort? And I ended up with this idea of clinical trials because I heard from another business owner, that pharmaceutical companies will pay you $10,000 to $20,000 per patient that you recruit. That's a huge sum of money, and I could do so in a very profitable way. And what that led to is, fast forward just 2 years later, after I started that clinical trial business, I was doing almost $1 million of cash flow. I had never done that in the 5 years that I had run my education business. And I was able to get to this point in the clinical trial business, doing $1 million of cash flow, which is incredible for a business owner, in just 2 years.
Hmm. And so did you sell the company, right? Because it was valuable at that point. Like it was doing $1 million a year and the team was in place and it was worth something.
Exactly. And that's the thing about building value, right? We're not just charting your path here for you to sell. We're charting a path for you to extract as much value as possible and live a happier life as an owner running your business, so you can generate good cash flow the way I was doing. And then when the time is right, or if you choose so, you can sell it for maximum value. And I sold that business for a few $1,000,000.
Beautiful.
Big news, guys. I created a free PDF that details my method on how I analyze a self-storage facility and figure out what it's worth. Give me a pen, the back of a napkin, and a couple metrics, and I can figure out about what the property is going to be worth to me. If you want to download this PDF, click in the show notes, the first link, and you can give me your email address, and you get a email right away with a 4-page PDF that outlines exactly how I think about underwriting or giving my initial analysis on a self-storage facility. Again, click the link in the show notes, and you're going to get that document for free. Before you go, we have a new sponsor of the show, recostseg.com. And if you bought a piece of real estate, you need to get a cost segregation study done. It's what allows you to get all that sweet, sweet bonus depreciation, and it's how real estate investors like me and many others pay almost nothing in taxes on an annual basis. You can cost seg a single family rental, a short-term rental, or a large commercial property. recostseg.com is affordable. and aggressive and super fast to turn them around. They've done 10 plus cost segs for me this year. They're going to do many more for me. Visit recostseg.com to learn more.